Hello. Thank you for joining this presentation on getting your filing status right. Today is February 14th, 2023, and my name is Tom Toft. Who am I? I'm a staff attorney at the West Michigan Low Income Taxpayer Clinic, which is part of Legal Aid of Western Michigan. Why am I giving tax tips? To help you get the money you deserve, and also to help reduce chance of audits. But before we get started, I just want to say that this is information, not personal tax or legal advice. So filing status. Let's get it right. Filing status is important. It's important because it impacts factors on your tax return. What filing status you check can prohibit you from doing some things, claiming some credits. It can affect how much your standard deduction is worth. The standard deduction reduces your taxable income, so a bigger standard deduction is better. Filing status can affect what types of credits you can claim. Tax credits can reduce the tax you owe and sometimes increase your refund. Filing status can also affect the amount of tax you owe because each filing status uses different tax rates and brackets. There are 5 types of filing status. There's a single filing status, which is normally for taxpayers who are unmarried or legally divorced or separated. The second status is married filing jointly. Married taxpayers can file jointly with their spouse. A third status is married filing separately. Married taxpayers can also file separate returns. A fourth status is head of household. For unmarried taxpayers who paid most of the cost of keeping up a home for them and a qualifying person living in the home for half the year. And a fifth status is qualifying surviving spouse. This may apply if a taxpayer's spouse died within the previous 2 tax years and the taxpayer has a dependent child. Let's talk about single filing status. Again, you can use this if you were never married or you were legally separated according to your state law under the decree of divorce or separate maintenance, or you're widowed before January 1st, 2022, and you didn't remarry before the end of 2022. Did you get divorced? Are you in the middle of a divorce? You can use single filing status if your divorce was final by December 31st, 2022. If you're just in the middle of it, that's not enough. It needs to be a final divorce by the end of the year. Do you have a dependent? If that's the case, you're going to want to see if you qualify for head of household status, because the head of household status has a higher standard deduction than single status. That reduces the income tax that you pay. It also means more income is taxed at a lower rate than a single status. And we'll talk about head of household in just a couple of minutes. I'd like to talk about what married filing jointly status is. Married filing jointly is where a couple reports combined income and deducts combined expenses on one return. You can use married filing jointly status if you were married at the end of 2022, even if you didn't live with your spouse at the end of the year, or your spouse died in 2022 and you didn't remarry during the year, or you were married at the end of 2022 and your spouse died in 2023 before filing a 2022 tax return. And a little note, it's marital status at the end of the year what counts with the IRS. Now, a married couple can file jointly even if only one spouse had income and they didn't live together all year. Two important things to remember is that both spouses must sign the return, and both spouses are generally responsible for any tax debt. That means if the tax return is filed with both people on it and it causes tax debt, that there's going to be a responsibility for both of the people who sign. You're both going to be on the hook. Now, I'd like to talk about married filing separately. This is a status that spouses may use if they're married as of December 31, 2022. And even though they're married, each spouse prepares their own separate tax return. Now, why would some taxpayers choose this? Well, it's possible that filing separate means less tax or more refund. That's all going to depend on the facts and unique circumstances. But also, it's so that one spouse will not be responsible for the other's tax liability. And that could be a really important consideration if there's a separation from a spouse or in the middle of a divorce. Whereas if you file jointly and there's tax debt or problems with the return, each party is responsible. If a married couple files separately, then there is not that joint liability for the debts. A special caution: if you file a separate tax return, it may limit the benefits of the earned income credit, the child tax credit, and the dependent care credit. If you're thinking about married filing separate because, say, a refund might be seized to pay on debt just one spouse owes, consider married filing jointly with injured spouse allocation to avoid the tax credit limitations. Now, this is a mistake I've seen where one person in a marriage owes some debts. People are worried, the couple is worried that, hey, if we're going to file a return, a refund is going to get taken to pay that debt. So they go and they file separate returns. They do married filing separate. And I've seen it where by making that choice, they've lost credits, particularly their earned income credit. And that can be thousands of dollars. So if one spouse owes a debt, you're worried about a refund being taken for that, you want to look into whether filing together with injured spouse allocation is going to be better than filing separately. Another caution is that with married filing separately, you cannot take the student loan interest deduction or the education credits, and you cannot take the standard deduction if your spouse itemizes deductions. One note is that many tax preparation software programs have an option that lets you compare married filing jointly and married filing separately. Usually there's just a button you click, and then you can kind of see what the difference would be between those two filing statuses. And that can be very helpful in making the decision. The next status is head of household filing status. In general, taxpayers can use this filing status if they were unmarried or considered unmarried as of December 31st, 2022. And they provided more than half the cost of keeping up a home for most type of qualified persons during 2022. And note, dependent parents do not have to live with the taxpayer for purposes of head of household. And when we're talking about keeping up a home, that means it's including things like rent, mortgage interest, taxes, insurance, repairs, utilities, paying for domestic help, and food expense. The benefits are that there's a higher standard deduction than single status that reduces income that's taxed, and more income is taxed at a lower rate than with single status. So earlier I mentioned that you could be considered unmarried for tax purposes. So when can married people use this? Well, even if married, you can be considered unmarried for tax purposes if any of these apply. If you were legally divorced or separated at the end of 2022, if it's a divorce, the divorce must be final by the end of the year. It may apply, and you may be deemed unmarried if you were married but lived apart from your spouse for the last 6 months of 2022. And even if you're married, you might be considered unmarried for tax purposes if you were married and your spouse was a non-resident alien at any time during 2022, and you didn't elect to treat your spouse as a resident alien. Now remember though, there are certain other requirements that apply as well. And so there's a caution. Head of household and filing status is complicated, and it's a common tax filer mistake. You want to make sure you meet all the qualifications. For example, some household members have to live with you, but others do not. Some have to be your dependent, but others do not. Some have to be your blood relative, but others do not. And I want to stress, if you're married, be sure you meet the requirements for the IRS to consider you unmarried if you want to do a head of household filing status. Getting filing status wrong can lead to audits, smaller refunds, or a bigger tax debt. The last filing status is qualifying surviving spouse status. Widowers or widows with one or more dependent children may be able to use the status if all of the following apply. A spouse died in 2020 or 2021, and you didn't remarry in 2022. You have a child or stepchild, not a foster child, whom you could claim as a dependent, and the child lived in your home for all of 2022. You paid over half the cost of keeping up your home, and you could have filed a joint return with the deceased spouse the year they died, even if you didn't do so. And there are some exceptions about that. These are just the general rules. So it can be complicated. So we have some resources that we wanted to point you to help you with this. The IRS has an interactive tool. What is my filing status? So you can go to this link and choose it'll help you choose a filing status that will cause the lowest amount of tax. It kind of asks you questions and you put information and walks you through to get to an answer what your filing status is. The IRS also has an interactive tool of who may I claim as a dependent. There's some IRS tips to help you file an accurate return. Here's a link to the 2022 Form 1040 tax return instructions. We also give you a link to IRS Publication 501, which discusses some tax rules that affect every person who have to file a federal income tax return. And it gets into questions like who must file, who should file, what filing status to use, and the amount of the standard deduction. And lastly, there's an IRS website where you can go to it and put in your zip code, and it'll show you places where you can go seek help with free tax preparation services. Are there any questions? Okay, great. Well, I thank you for joining us today. I hope you have a good tax filing season with getting your returns done. And I thank you again. Bye-bye.